Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to have a look at a lovely VS cell that's just unfolded on a 3-minute chart of the NQ. But as usual, before we look at the charts, we have to look at our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and trading purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold no matter what trading approach you take. There always will be losing trades. In today's video, I'd like to look at our MTPredictor scripts for TradingView, which is what we have here. So the chart I'd like to look at is a 3-minute chart of the NQ, and I'd like to look at this VS cell coming in up here a little while ago. For you guys who are new to MTPredictor, we're not a black box system. We don't take trades blindly as if it's like a 100% mechanical trading system. The reason we don't do that is because we know and understand that markets are random about half the time. So we only look for trades where the picture's clear in relation to the higher degree chart. In other words, we only look when the picture's clear. That's only about half the time. So how do we do this? Well, for this we go to the higher time frame chart. So on this 3-minute chart, I'd go out to the 15-minute chart. If you say trading as a daily stock, you go out to the weekly, maybe an hourly, forex, you go out to the 4-hourly chart. Now for this, we place our DPs on the chart. I'm just going to use the bar replay here and go back to a little bit earlier in the day here, and I want to show you how we place our DPs on the chart. So I'm just going to open up the decision point script, and I'm going to go back -1 pivots back -1. I'm going to place that DP off that pivot. Can you see it, how it's on the chart in advance? Do you see that? It's before the market even got there. I'm now just going to draw a little rectangle around it, perhaps place a bit of text in the box. I'm now going to lock that so it doesn't move when I change time frames. I'm now going to take the DP off. So there's the level left with that rectangle. If I turn training mode off now, can you see what the NQ did? It went up to that level and then reversed to that level. So that's what we're looking for. And how we decide on whether the picture is clear, we see whether the market is doing what we anticipate. If it doesn't, which it won't about half the time, the market's an unclear pattern. If it does reverse at our anticipated levels, then we deem the picture's clear. So now I've just gone back to the 3-minute chart and just look what a difference this makes now. Can you see what happened when we got this 3-minute VS cell here? It happened at the higher time frame resistance. In other words, the two time frames were coming in and telling you the same thing. That's when we deem the picture's clear. So let's just place the analysis on this. So this is an advanced trade setup, the VS. So I'm just going to open the script up. Now, if this was happening at the time, you could basically be able to use the last pivot. But because obviously this has happened a little while ago, I have to use pivots back, and it's -1, -2 pivots back. So 2 pivots back, we can analyze the trade setup. It's on the there's no tick offset there. Sorry, there's no bar offset because it's the very bar of the reversal where that MTPredictor red cell bar came in. So using 2% of a sample $20,000 account, 2% of a sample $20,000 account, that would mean going short for 4 contracts. Our projected target was down here, and you can see the market did indeed take you into a short trade there. It then carried on down and has just very recently hit our target, where a profit of approximately 9.5 times the initial risk was available. This is why we like these particular trades, because the VS trade is off a high volume spike, which we have on our MTP VS color-coded indicator down there, and it's basically where the market has made a wide range move on high volume beyond a psychological important high or low. And you can see that was the important high there previously. So the market went up, it went into our anticipated reversal level, it then reversed. In other words, the high volume there, normally you'd anticipate it was buying if it broke above a new high. But because the market failed to follow through, reversed down, that high volume was actually selling, and this is the VS or volume spike trade setup we have here. In other words, it's a fake out. The market made a fake out on a break to new highs. Oh, I'm just going to put the analysis back on there. Sorry about that. It's just because the pivots changed there. So just going to do that off the last pivot. There it is back there. That's fine. So that allowed you to come into a new short trade. The market went down. As I said, it came to our anticipated target. The reason we like the VSL setups is because this is the professional money coming in here. You tend to get some good big moves off these volume setups. It's because it's the professional money coming in. So the professional money fakes out and then moves in the opposite direction, catching all the amateurs on the wrong side of the trade, and that helps push the market quickly in the opposite direction. Because we use position sizing, this keeps our inevitable losses. There always will be losing trades, as I said right at the start of the video, but the reason is that we keep the losses small when the anticipated losses come through. So if you had a losing trade here, it would be a -1R or 1 risk unit loss. But because this was a big move, you can see the target we had down here was not just large in dollars that it's just reached, but in risk reward units. This is the important number. So this profit was about approximately 9.5 times the initial risk. In other words, the profit was 9.5 times the loss that would have happened if this trade had gone wrong. So this is why we like these trade setups, is they very often have large risk reward profits associated with them. So there you go. There's a lovely VSL setup that's just unfolded on a 24-hour chart of the NQ, where the result was a lovely 9.5R profitable trade. If you trade the ES, if I look at the ES, there was also a VS sell at that particular same time as well, where the market came down. The profit on that wasn't quite as large as the NQ. The NQ had the larger profit. So a good example of using our MTPredictor scripts on TradingView charts to uncover a VS or a volume spike MTPredictor trade setup.